All right, ladies and gentlemen, just moving on to our next presentation from Zach Kitowich,
Yep.
Abitibi Metals.
Awesome. So, hey guys, I'm Zachary Kotowich. I work on the corporate development side at Abitibi Metals. So, getting into the presentation here, just some forward-looking statements. And yeah, so our flagship deposit is a B26 deposit. We're operators out of Quebec, and the company was founded by John DeLuce out of the DeLuce family office. The family office is most notable for their success in the airline industry. With you guys probably all know Porter Airlines, so they founded that company, and John DeLuce is kind of running the mining portion of their family office. So how we got this project is we optioned it from the Quebec government. So the Quebec government, they're really good at pushing a project from the initial discovery onwards through the maiden resource. But once they get to that resource stage, then they kind of hand it off to somebody else who takes it the rest of the way up the Lassonde curve. So they put 25 million into the project, and that was really beneficial to us because when John optioned the project, we were able to, within a year, improve that resource from the initial maiden resource 64% to 18.5 million ounces or 2.2% copper equivalent. And so we're really excited about this project because we believe there's two ways that we can really generate a lot of value. So when you look at the contained metal distribution of our resource, 55 million pounds of copper, 370,000 ounces of gold, 13 million ounces of silver, and 340 million pounds of zinc. So when you look at a percentage basis, that resource is broken into 60% copper and the rest is in the other metals. So whether you believe in the copper thesis or whether you believe precious metals, we're there to benefit and we're poised to grow with the price appreciation of those industries. So then when you look at our financial cap table, we have about 153 million shares outstanding. We have minimal warrant and option overhang. There's about 4 million options and 600,000 warrants priced at about 75 cents. And so on a fully diluted basis, we have about just under 160 million shares. And another thing we like to highlight is if you aren't invested yet, I think this is a great entry point. On a relative basis, we compare ourselves to companies that are single asset polymetallic or VMS developers like us. So those companies are like Foran Mining, Firefly Metals, or Arizona Metals, and they have an EV anywhere between 1.6 billion to 77 million. And when you compare that on EV per copper equivalent pound in the ground, they trade at anywhere between 70 cents to 12 cents. And if anyone can guess where we're at, well, our market cap's at about 35 million, so we're below 2 cents a pound of copper equivalent. And so when we keep hitting our development and exploration milestones, we believe we're going to re-rate closer to peers, and we should see that market cap anywhere between 100, 200, 300 million. And in terms of our capital position, we have about 17 million. And so we allocated 20,000 meters this year, and then taking us to 47 or 45,000 meters by the end of 2027. And we're fully funded for the next 2 years. And we're looking forward to just keeping you guys up to date with further exploration milestones. So here's the team. You'll notice I'm not up there, so you're not getting the best and brightest, but I assure you that the team, they're up there doing their work out in the field and they're working hard, and that's why they couldn't make it here. So like I said, the company is led by John DeLuce. He has he's pretty much his entire life was spent in the mining side of the industry. But what I want to point out here is a lot of mining companies, they start with a team and then they go looking for assets. What John has done here, he's tailored the team for this specific asset. So the B26 deposit, it's a hybrid VMS orogenic style ore body. And recently this year, he made two really good additions. So Louis Garapi, he has been in the industry for 20, 30 years, and he's worked specifically on VMS and orogenic style deposits, mainly in Peru, South America, and the Abitibi. But he recently came off a really strong win where he was VP exploration at O3 Mining, and they were taken over by Agnico for $200 million. And so it's going to be invaluable having his help kind of pushing the story along. And then our second really strong addition was Laurent Eustache. He spent 20 years working in the Abitibi for companies like Agnico, and he spent some time on the buy side, and he is going to be invaluable as both of them. You'll see in the next slide, the B26 deposit is surrounded by Agnico Eagle and other major producers. So having their skill set, having worked with the majors, is going to be invaluable in knowing what they look at when they potentially want to be involved with junior explorer and developer stories like us. So this is where we're located in Quebec. It's the Abitibi Greenstone Belt. The Abitibi Greenstone Belt is essentially a 2.6 billion year old geologic complex. And it's very prolific for high grade deposits because there's been a lot of shearing, and I won't get into the geology here because I'll bore you with the geology in a few slides. But essentially the area, there's been 12 billion in terms of M&A activity since 2010. I believe currently there are 30 exploration projects that are being pushed along by major mining companies. Since the 1990s, there has been probably more than 100 mining projects actually in production in this area. And having spent some time working on the equity research side of the industry, having infrastructure, having power, and having a lot of these things that will essentially lower and decrease the development capex for a lot of these larger producers is essential. And so we're really in the right area code, and we're just looking forward to the things to come. And so I spoke to you about the publicly listed equities that we compare ourselves to, but where we really see the B26 deposit is something closer to the Selbay mine. So the Selbay mine is located 7 kilometers to the northwest of us, and it produced 53 million tons since up to the 2000s when it got shut down. And this is an organic geologic comparable to us because it has the same grades, same recoveries, same structure, and a lot of similarities. So this drill program that we're currently embarking on, 80% of it is going to be step-out holes, and we'll get into the details of the drilling later, but 80% of that is going to be step-out holes that are going to be aimed at essentially growing the tonnage and the volume of B26 to showcase that we do have a Selbay style deposit. And so this is just more on the area that we're located in. And here is just a scientific study that shows where we stack up globally compared to similar ore deposits. So when you look at us, we believe that we can really demonstrate with further drilling the economic potential at depth. So when we continue growing this and adding volume, right now we're in the top 10% in terms of tonnage compared to other global VMS deposits. And when you look at copper, gold grades, we're in the upper 40%. And so here, the best way that I can describe this, I'll get into some geology now. The white is the Brouillon complex. It's French sounding, so I can't really say myself in terms of pronouncing it, but it's a Brouillon complex, and that complex serves as the magmatic chamber for a lot of the rocks. And the rocks are tonalitic to dioritic in composition. And that yellow there, you have a lot of these cross-cutting dikes that essentially are gabbroic and dioritic in composition. And then that green there is the southern boundary, and it's composed of a lot of graphitic mudstone, iron formation, and ultramafic sills. And so when I brought up the hybrid ore deposit model, that blue there, that's our VMS, the standard VMS, where you have a siliceous environment within a rhyolitic tough assemblage, and then you have sediments, which are iron formation, iron carbonate, you have some mudstone in there, and then you have interlayered banded sulfides. And then when we go to the orogenic deposit to the north, or style deposit, it's essentially veins and veinlets of chalcopyrite and quartz that cross-cut the foliation. And when we look at that domain close to different faults, it's highly silicified, and you have a lot of pyrite. And so summarizing this, if I had to put in a spectrum, you have a synvolcanic domain, a synorogenic domain, and then a post-tectonic domain. And with the synvolcanic, it's mostly siderite, sphalerite, pyrite lenses. With the synorogenic, you have veinlets and veins of chalcopyrite, pyrite, and quartz. And then in the post-tectonic, you have this brecciated environment with very angular fragments, but it's a replacement of a lot of silica fluid. And so here was our phase 1 and phase 2 drilling programs. We succeeded in really indicating strong recoveries. We really hit a lot of high-grade material at depth with 2.38% copper equivalent. And then we hit a lot of good results near surface, a 2.5% copper equivalent over 61 meters, 3.9 copper equivalent over 21 meters, and 2.68 copper equivalent over 25 meters. And so this is really perspective, because if you guys saw in the first slide, that copper equivalent grade that we have in our resource is 2.2. So this is all sort of organic upside to increasing the grade profile of the deposit. And now we recently put news out that we'll be increasing our drill allocation in phase 3 to 20,000 meters. And so the goal of this program, you can see in the sort of pink areas, we want to really highlight higher grade zones to increase the contained metal content in our next resource update. And then when you look at these other areas, that's going to comprise of that 80% drilling that is mostly step out holes. So the step out holes, they're going to be really looking to increase the volume and the tonnage of the deposit. And that's where we think we're going to generate the most value. And when we look at this gravity anomaly, that's there, the oval sort of purple shape there. We believe that we can add a lot of tonnage, a lot of high grade material, and really increase the contained metal content of our deposit. And so future initiatives that you should be aware of, we're going to be doing some more downhole geophysics oriented core and structural work, sonic drilling, VTEM surveying. And we're going to just look at the geological model and lithological model just to see where we can improve it and continue revising things moving forward. So here are results to date. So we've successfully increased the grade of the 2024 resource. As I said, we've hit higher gold credits in our drilling, and we've also done a lot of step out drilling, which has really hit a lot of mineralized material. And so we're very prospective that this will ultimately increase the resource and generate a lot of catalysts moving forward. And one area that we're very prospective on is the Western Plunge. We were seeing some very high grade hits down at depth, and we're getting a lot of these hits as well, like the 3.65% copper equivalent. At depth, we're seeing that we're getting a higher gold credit in this area where you see usually these high grade shoots that we see there outlined by the red and blue lines. The high grade shoots, they trend with the foliation of the deposit. But what we're seeing at depth is you get a lot of these core structures characterized with higher gold grains that are cross-cutting the foliation. And so we're really optimistic at what potential that has to kind of continue adding to the resource. And so here's the regional expansion potential. We did gravity surveys in February of this year, and what's really promising about this is the B26 deposit is in yellow there, and these light blue areas are all gravity anomalies. So back when the technology wasn't as good, you had a hard time differentiating the graphite from the pyrite. But as technology now advanced, we are able to separate the pyrite and the graphite in our geophysical surveys. So we have 8 prospective targets to the northwest, and then 4 prospective targets on strike with the Selby mine. And so we're going to test which geophysical surveys work on B26. And then moving forward, we're going to use those to try to highlight which of these have the greatest potential. And then hopefully we can show that this isn't just a one mine area. This is a district scale potential play. And so here's a case study with one of our comparables, Foran Mining. Before they had a resource that was similar to ours in size and scale. Ours is about 18.5 million tons. In 2019, they had a resource of 22.9 million tons at a slightly higher grade, but definitely in our wheelhouse. And then when the copper bull market really took off, they caught the tailwinds of that market, and their share price essentially increased 10, 20 times from 12 cents to 20 cents. So we believe where that red arrow is, $2. Sorry, we're by that red arrow there, and we believe we're right on the cusp as we continue to delivering organically with the drill bit and showing that we have a development story here. Is we believe we'll re-rate and have something similar to what you see here with Foran. And so these deposits, they have a lot of room to grow. And when you find discoveries, they don't just stop at a kilometer depth. These things really have a lot of potential to keep expanding. And we highlight this with Foran. their deposit goes down to about 1.3 kilometers. LaRonde with Agnico, their deposit extends well below 3 kilometers, and their grade is significantly higher with 3%. So there's room, just by looking at our peers, how much in terms of growth there actually is here. And another thing we like to highlight compared to other North American copper deposits, we took the open pit and underground the grades, and we put them together just to see where we stack up. And in terms of gold, we have the highest gold credit compared to a lot of our peers at 0.6 grams per ton. And we believe that's going to keep expanding based on what I showed in the other slide, where we're getting a lot of higher gold grades at depth. So as we keep going deeper, we believe that we'll be able to improve that gold credit overall. And so here is just in slide. I've talked a lot about how we stack up to our peers, but here's Foran Mining. They have an EV of about 1.6 billion. Firefly, they have an EV of 800 million. Arizona Metals at 77. And when you look at the in situ value, it's definitely not orders of magnitude higher like the valuation would imply. And so our copper equivalent grade definitely stacks up favorably to comps. Arizona Metals has a higher copper equivalent grade, but that's because it just has a very large zinc component. The majority of that is, I'd say, zinc. And so, yeah, so we trade, like I said, a very steep discount, 2 cents per copper equivalent pound relative to peers at 69 cents to 12 cents. And so, again, we trade on the CSE with the ticker AMQ. We have about 153 million shares outstanding. I sort of went over that at the start of the presentation, but here's our detailed breakdown of ownership. Management over 17%. The Duluth family owns about 10%. High net worth shareholders are about 16%. Then SOCOM has 9.9%, and institutions have the remaining 25% with 22% remaining in the float. And so we do have research coverage. Haywood is the only sell-side firm that currently covers us. And the analyst there is Pierre Valen Corp. He has a buy rating and a 60-cent target price, implying about 150% upside to current levels. And that target price, when you look at it, it's kind of a blended valuation based on whether you're looking at it from a development standpoint or from an exploration side of things. That target price is a blended valuation of taking the in situ value and applying it to the target price, or having a DCF that ascribes 50% of that value. So complementing our management team, there's a very strong advisory board with Shane Williams. He's the CEO and president of Red Lake Gold. Eric Kallio, who was recently executive vice president at Agnico Eagle. Then Victor Cantori, who's the CEO and president and director of Amex. And then Chris Levy, who was chief investment officer of BlackRock, where he was in charge of advising and allocating 115 billion in capital into the equity markets. I've already talked about this. Yeah, so that's I guess it for me. And hopefully that I didn't get through that too quickly and everyone was able to follow. But thank you so much for your time.
Thank you. Thanks, Zach. Great presentation.
Thank you.
I guess first, just to start off, let's open up the questions to the floor, see if anyone has any questions in the audience.
How far down do deposits go? I mean, for instance, if you want to get hot rocks and do geothermal energy, you might go down 5 kilometers, most places, I think.
That's a good question. I know some deposits go down to depths of 5 kilometers. LaRonde, like I put up there, goes down to a depth of about 3.3 kilometers. But for a company of our size, right, when you look at a DCF, a lot of times in economic studies, you won't get to that 2 kilometer mark until 5-10 years out. So geothermal is definitely applicable to certain companies, but it's something that I'm not sure we'd consider just now. Maybe in an economic study, that's something that we'd visit. But right now, haven't really given it much thought.
What are some of the triggers that you think will do the re-rating? You know, you said that you're on that cusp of the. Well, what do you do? What's happening in the next quarter, 2 quarters that might kind of trigger the stop?
Yeah, so in the next kind of few quarters, we're definitely going hard in step hole drilling. So I think the market really doesn't reward infill holes. So a lot of companies we see, they drill, say, it's an inferred resource, maybe you have 400-meter spacing, And a lot of people try to find higher grade material within that space. Where the market we're seeing a lot of values generated is when you take these sort of not Hail Mary holes, but these further step outs that show you have a lot of size or a lot of potential to upsize in terms of size and scale. So we believe drilling, we are going to keep drilling out to 2027. And then potentially, right now, part of our option to earn 80% is a PEA. So we're looking at different economic studies, and we think that could definitely be a catalyst as well. We have internal studies, right? I can't really comment on them, but definitely, yeah, we've definitely done economic studies. And that's one thing that I think John and the team does really well is there's some explorers where they just want to hit a hole and add material onto their resource table. Every single hole that we drill is methodically thought out to make sure those tons that we add to the resource will be added to the mine plan later on, because a major can do their own internal scoping study, right? So if you have a large resource, but once you actually put it into an economic mine plan, 50% of it, you have to throw it out because you'll never extract it. That's something that a major can find out on their own. And we just want to make sure that every single hole we drill is material added to a potential mine plan. And we do use our internal scoping studies to drive our drill program.
I have a few questions myself here, and I know you had the equity research background, and I saw you had I do have myself as well, and I saw you had a little bit of evaluate. I was at the Benchmark company in Midtown Manhattan for about 6 years.
Awesome.
But I definitely agree there. So I was wondering if you had any thoughts. I know you touched on this a little bit on what you could do or what you need to do to kind of narrow that valuation gap between you and your peers.
Yeah, so I think like from what I've seen, even from equity research, right? So explorers, they trade anywhere between kind of like 1 to 2 times NAV. And so when you look at a lot of these development companies, they're around 5 to 6 times, right? I'm sure that has changed now, just given how the industry is trending with commodity prices being where they're at. But I think it's really just showing size and scale. So when you have a smaller deposit, you can only justify a certain mill size, right? If you show that there's greater potential to a larger project, then I think that's when there's potential for us to really re-rate compared to our peers.
Awesome, excellent. And one last one from me. What do you think it would take to get a major producer over the line to make an equity investment, you guys?
I think it's like what I was saying. It's really showing that, like I said previously, is just showing that there is an economic deposit there, right? And so 20,000 million or 20 million tons is a real threshold that we think a lot of majors have. But also it's showing that there's there's more potential for higher grade material. So everyone always says grade is king. So just mentioning what you just said in terms of what will get that re-rating. I think when people run their discounted cash flow models, grade is a big input into the eventual valuation. And so showing that we have material that is above 2% to 3% to 4% copper equivalent, I believe will really improve project economics, improve the IRR, and essentially the payback period. And I think these are all levers that the majors are looking at and things that can really drive a project forward and essentially get a equity investment.
Excellent. Thanks, Zach. Just before we leave, anyone else from the audience have any questions? Or?
Hi. I see you have a Frankfurt listing. Just wondering how that works out for you and if you'd considered a UK listing.
I think that's above my pay grade. But no, I know we do a lot of work in Germany, and Germany's been great. So I'm not sure to be totally honest.
All set? Excellent. Thank you.
Thank you.